Good morning, I'm Raine Musñgi and welcome to Follow the Money, where we dive deep into the world of finance to uncover the trends and insights that shape our investments and financial futures. Taxes can feel like a burden, but what if they could actually work in your favor? Today on Follow the Money, we're joined by Mon Abrea, Asian Consulting Group founding chairman and chief tax advisor, to uncover the strategies that can turn your tax obligations into financial opportunities. Mon, thank you so much for joining us. Welcome to the program.
Thank you for inviting me.
We appreciate you joining us live all the way from Washington. Maybe to start, may we know what are the most unpopular taxes that you deal with, or perhaps the kind of taxes that people have and for which they need a skilled accountant or lawyer for the most, and why?
Well, it's not usual that, or it's not a day-to-day transaction that we deal with transfer taxes. Transfer taxes are when we sell a property, when we donate something, or when we inherit. That's why it's called transfer taxes. Under the Train Law, fortunately, it was made simple because effective to the 2018, it's no longer different rates. It's flat 6%. So when you sell a property, you just pay 6% capital gains tax. When you donate something in excess of 250,000 pesos, you pay 6% donor's tax. And when you inherit something from your loved ones, from your parents, in excess of 5 million standard deduction and 10 million family home, you pay 6% estate tax. So it's flat 6%.
Right, so maybe later we can talk about how certain situations would force people to actually just sell whatever they inherited from other people, and sometimes how they can actually accumulate government debt instead of having to earn or inherit an asset. Now, for individuals planning to transfer property to their heirs or loved ones, what legal strategies can they use to minimize taxes on property transfers while ensuring compliance with tax laws?
Before the Train Law, the traditional strategy is to set up a corporation. But this is a reminder to everyone that under the Train Law, we have a 10 million family home. In short, if you do not have a real property or a property valued more than 10 million pesos, it's best to retain or keep it under the name of the parents. In short, wait for them to transfer it through inheritance, because the first 10 million is tax exempt. Unlike if you transfer it by selling it to your kids or to your loved ones, you will have to pay 6% capital gains tax. So again, if it's about 10 million, then that's the time that we think of another ways. Like for those with the real properties that are being used for business, it's better to just exchange it for shares of the corporation, because there's a tax-free exchange. So instead of selling the property to a person, you can just exchange it with shares of the corporation, of your family corporation, and then just split the shares to the supposed heirs. So that is tax-free.
That's really great advice. Now, what advice do you think can the BIR offer to individuals engaged in estate planning to minimize estate taxes and protect their assets for future generations? I know that some people actually set up their own corporations, and even better now because you don't require 5 individuals to form a corporation, even just one.
Yes, that's under the one-person corporation. First, I think we have to remember that there is still an estate tax amnesty that was extended until June 14, 2025, until next year. So I think the first advice is to avail of the estate tax amnesty, because it literally waives all interest and penalties. And instead of using the rates up to 20% estate tax before the Train Law, the amnesty will only impose 6% based on the value of the property at the time of death. So this will really give a huge savings to all our Filipinos with unsettled estate taxes. And the second thing is to set up a trust account, so that you can already start saving up instead of waiting for the death of the loved ones, you can already transfer gradually properties or income to your loved ones.
Meanwhile, as individuals progress through different stages of life, such as starting a family, buying a home, or preparing for retirement, how can they effectively manage personal and business expenses to optimize their tax obligations?
For employees, it's really difficult because under our tax code, employees are not really given allowable expenses or deductions. So this is mainly for those with practicing profession or businesses because they can avail or claim allowable deductions to reduce their taxable income. But for those with extra savings or money to invest, it's really best to start building your investment portfolio because under a tax code, there is less taxes for passive income. So let's say, for instance, instead of just working for a salary which is subject to 15% to 35%, dividend income is only subject to 10%. So imagine if you invest in a corporation and you earn dividends yearly, yeah, whatever dividends you receive is only subject to 10% final tax versus a salary which is subject to 15% to 35% personal income tax. The same applies for other investments. In fact, there are several investments which we are promoting for young professionals or even our overseas Filipinos because they are tax exempt. Investment in real estate and investment trust fund. Instead of buying a condominium, you can buy shares of a REIT corporation, and there is a mandatory annual dividends, and that is tax exempt. So you can generate a high yielding investment without paying taxes.
No taxes, but is there an entry fee, an exit fee, and other management, maybe management fees?
Well, a lot of these can be done online, but of course, if you need someone to manage your account, then especially if it's through the bank, then there are fees involved. But as far as those who can do it online by themselves, there might be some few charges, but it's very minimal. And what is important is you can access all the details and that there is no taxes to be paid.
Right. So when it comes to investments and
in
wealth
terms of
accumulation.
investment, sorry. Also, in terms of investment, if you invest in the stock market, if you invest in a closed corporation or those which are not publicly listed, you pay you pay 15% capital gains tax when you sell the shares. But if you invest in publicly listed shares in the Philippine stock market, you only pay 0.6% stock transaction tax. So again, it's important to know the different taxes because you can actually have options and you can avoid those with higher tax rates.
Understood. Now, as you suggested that as we're building our personal investment portfolio, when it comes to investments and wealth accumulation, what tax-efficient strategies can individuals employ to maximize their returns this time while staying within the bounds of the law?
Number one, if you are to start a business, I suggest that you avail first of the income tax exemption under the Barangay Micro Business Enterprise. As long as your initial capital or total assets to be employed in the business do not exceed 3 million pesos, that actually gives you an income tax exemption. But you have to apply to DTI Negosyo centers, and that's available nationwide. Second, if you are non-VAT registered, and I honestly suggest that for those online sellers, professionals whose annual income do not exceed 3 million pesos, yeah, you can avail of the optional 8%. So instead of paying income tax and 3% percentage tax separately, you only pay 8% in lieu of both income and percentage taxes. Then, as I mentioned earlier, for those who are investing in the stock market, if it's publicly listed, you only pay 0.6%, and that's final tax. You don't need to declare it to BAR. It's already withheld at source, so whatever gains you receive from your stock investment, you don't need to declare it to BIR, and it's already net of taxes. While if you invest in closed corporations or other corporations that are not publicly listed, you pay 15% capital gains tax. So those things are very important in terms of doing a cost-benefit analysis as to where you put your money. And as I mentioned also earlier, those who are into real estate, if your savings or capital is not yet that significant, you can start with REIT corporations or real estate investment fund, trust investment. It means that you can just buy shares of REIT corporations, whether it's Ayala, DMCI, or other REIT corporations, and as low as 5,000 pesos, you can buy already shares, and you get an annual dividends, and whatever dividends you get is already tax exempt.
Lots of useful advice right there, and lots of savings to be made. We'll be back with Mon Abrea in a moment. We're taking a quick break. Follow the money. We'll be right back. Stay with us. Welcome back. You're still watching Follow the Money. Let's continue our discussion with Mon Abrea, ACG founding chairman and chief tax advisor. Now, Mon, for those with existing mortgages or considering taking on a mortgage, what tax benefits or deductions can they take advantage of to reduce their overall tax burden?
Well, obviously, because we have to pay finance cost or interest expense, that is actually tax deductible. So that can reduce our taxable income.
All right. Meanwhile, what steps can individuals take to ensure that they are not overpaying taxes on income from multiple sources, such as salaries, investments, and side businesses, while remaining compliant with tax regulations?
As I mentioned earlier, we have to distinguish our income, the active and the passive income. The passive income are investments made to shares, to bonds, and these are normally subject to final tax. Therefore, you don't need to declare it separately to the BIR and pay separate taxes because taxes are withheld at source. So the only thing that you need to monitor are your active income or your income from your compensation income, business income, or professional income. So one thing that you should make sure is that you monitor all the income that you receive because there are differences as to the tax rates that will be applicable. For instance, I always say, Rain, that if you're starting, you have actually more leniency because you have optional 8%. And you have the income tax exemption under BMBE. But if you are making above 8 million pesos, I actually recommend considering setting up your one-person corporation because under the personal income tax table, those who are earning above 8 million pesos will be subject to 35% personal income tax versus a one-person corporation whose tax is only 20% as long as your net income do not exceed 5 billion pesos. In excess of 5 billion pesos, the fixed rate is 25%, still lower than the highest rate of personal income tax at 35%. So as you grow your income, the more that you have to be aware of the taxes because the options are there, but it is not automatic. You have to know it and you have to select it.
Now, Mon, in current affairs, of course, government is looking into applying taxes for digital creators, as well as looking at the train law. It doesn't give any benefits for solo parents. So in current affairs, are there recommendations that you would like to make to government, perhaps in terms of taxation or new sources of income for the country?
Actually, for solo parents, I think it's important that we consider giving them restoring the allowable deductions for dependents if they are solo parents, or even for married couples if they have children more than four. I think they should be given an allowable deduction for every dependent in excess of four. I actually gave that suggestion long time before when we are still revisiting the income tax table. But of course, we wanted to increase the exemption from the usual 50,000 to 250,000. So we kind of make a compromise that as long as the exemption will be increased to 250,000 across the board, we're okay. But it removes the consideration for single parents, for married couples with more children. So I think that's something that we can consider, especially because we have a lot of solo parents and we have a lot of families with more than 4 children.
Correct. What about for digital creators?
I always suggest that for digital creators, since most of you do not employ or invest more than 3 million capital, that you apply first to DTI Negosyo Centers for the income tax exemption under BMBE law, so that you don't have to pay first income tax and you only pay 3% percentage tax based on your quarterly sales. I think that's manageable and that's something that they can pay.
All right, Mon, we don't have any more time, but as a last question, and perhaps you can also impart your final words, what legal avenues are available for taxpayers to perhaps challenge or appeal tax assessments that they believe are unfair or incorrect, particularly in the context of property, investments, or even personal income?
I always say this, Rain, that when you deal with the PIR, while they are open to discussion and communication, always put it into writing. Don't rely on text messages or phone conversation or face-to-face discussion, because that is not admissible in court. So make sure that when you believe that you have paid or settled it, and I've encountered it several times in the past, I just forward a letter, attach the supporting documents, and have it received by BIR. And they either withdraw their assessment, reconsider the assessment, or cancel the assessment. So it's important that you always put it into writing and make sure that you respond to any communication sent by BIR. Otherwise, if you're at default, it becomes final and you have to pay it.
Excellent advice. Remember, it's not just about paying the taxes, it's also about making taxes work for us. Thank you so much, tax whiz Mon Abrea from the Asian Consulting Group. We appreciate you staying up with us. Thank you. And before we go, we leave you with this final thought from American economist and statistician Milton Friedman. An optimal tax system isn't just about revenue, it's about creating incentives for prosperity. And that's it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News channel, always on top.